Yeah, brown bag, you can even have less than that, right? I agree with you. So look at these guys. Norm just tells how his most profitable month he had a 30% win rate. That's true. Amazing. So look at these guys. It actually depends. And look at this. If you go for 1-to-1 R's, you definitely need more than 50% win rate to be profitable. If you go for bigger R's, you don't need 50 or more than 50% win rate. Other thing is, if you go for 1-to-1, most of the times your trades will work out. It's easy to get a 1-to-1 trade, right? You're getting in, you're just getting the amount you risked, and you're getting out. If you are aiming to get bigger R's, 2, 3, 4, 5 R's, you will be stopping out more often. So it depends on how much you are aiming to get or how much you're actually getting from your trade. If you go for 1-to-1, most of the time your trades will work out if it's a good strategy. And yes, in this case, you would need at least 50% or more than 50% to be profitable. And 70% would be a good percentage to aim for 1-to-1 trade. If you go for 2-to-1, you need only 35% to be profitable. And you'll be stopped out more often because you're aiming for bigger R's. If you go for 3-to-1, you need, I don't know, 25% win rate, somewhere around that, to be profitable. And you will be stopped out more often because you are aiming for a bigger R right there. And that's totally normal. I mean, I don't say that you need you must have 35% if you go to 2-to-1. You could have 50% win rate maybe with a 2-to-1. I'm not saying that it's impossible to get 50% win rate or even a 70% win rate with a 2-to-1, but you need to know that the bigger the R you are aiming for, the more often you'll be stopped out. It also depends on your entry, your stop loss, and how good at that. But you don't need to have 70% win rate to be a profitable day trader. It's all dependent on your risk to reward. And I'll give you an example from my trades today. And today, I had 33% win rate. I had 4 losers, I had 2 winners, and I'm up 6 R's for today. You see this? Like 4 losers, 2 winners, up 6 R's. I've taken INTC, that was my first trade for today. I tried it for a parabolic reversal here, and here I did break my rule. It was like the first candle, 5 minutes, remember what we said? Better to wait for the third candle before a parabolic reversal. I still broke this rule. I thought it might pull back. It was bad trade. It doesn't really matter. It was a loser. I waited more for a parabolic reversal. It gave me my entry, gave me enough confirmation candle, had 7 cents stop loss on it, and look at this. Rode it all the way down, and I bailed on it only when I had a W shape on the 1 minute chart. It wasn't a perfect ABCD pattern with a W shape, but the 5 minute candle scared me out and I actually bailed on it. Now, let's see OSTK trade. I had one trade here, it was a loser. And it's totally fine as well. Look at this. OSTK going up, extended from the 9 moving average in the 5 minute chart, double dojis at the high of the day, new 1 minute low, I'm getting it to the short side, it's getting me stopped out, and then it's working out. Never given me a good entry to the short side, I'm not mad about it. And the last trade I have taken, I think it was QCOM. Yeah, it was QCOM, you see? Same thing, extended from the 9 to the 5, my rules are good on it, fourth continuous 5 minute candle, made it doji, new 1 minute low, I get stopped out. Here I broke my rule, I told you I never go after a hammer, but I still took it to the short side after hammer, got me stopped out, continued watching it, broke the high of the day, climactic volume, reversal candle, new 1 minute low, short at 105.30, stop loss 105.12, and my first partial 104.60, so it's around 4 hours, and I exited all out at around 6 hours, 5 hours, or 6 hours realized. Yeah, 6 hours, I think, around 6 hours realized in this trade. And this trade, I was up 4 hours realized. INTC, I was up, I'm not sure how much, I think this was around 5 hours realized. And 4 losers, I'm down to 6 hours for today. So see, you don't need to have a huge percentage win rate. Just try to manage it and manage your risk to reward. And it's normal that the bigger Rs you aim for, the more often you are going to get stopped out. I hope that trade worked for you, Sergio. So Peter, if you look at the image Peter sent us, he has a 90. You have a 90% win rate, Peter. Let me see that. Let me download it actually and open it. So look at this, guys. The actual what Peter is getting 90% win rate. If he aims for 1-to-1, it will be 54.5. If he goes for 2-to-1, it will be a 40% win rate. So basically, this is what we just talked about. The bigger the R you are going for, the more often you will be stopped out, which is totally fine, right? Oh, hey, Peter. Mm-hmm. Mm-hmm. Let's just open it. Mm-hmm. 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 Yeah. Yeah. Yeah, exactly. Yeah. Thank you, Peter. Yeah, you see, guys, nobody needs to tell you how much your percentage needs to be. If someone is asking you, what's your percentage win rate? And you tell him my percentage win rate is 30%, he'll tell you, oh my god, you're a bad trader. How can you make money with a 30% win rate? Maybe you are making 7 hours trades with those 30% win rate, right, guys? So don't care about what anybody else tells you. Go for with your actual strategy. Do whatever you are doing, and you see what actually Peter is doing. 90%, right? If he holds for more, or at least for 1-to-1, he will be getting 54% win rate. But whatever, I mean, he is doing whatever he's doing. It's working for him. He keeps doing the analysis, and eventually he'll be following what the statistics are telling him, because statistics in day trading is your friend. I mean, do you usually only take reversals of hammers, or will you also do them of other patterns like engulfings? No, I take them of confirmation candles. I have them in the success webinars. Dojis, reverse hammer, or shooting star if I take it to the short side. An evening star pattern, or some other reversal patterns. I will be talking about them in detail if we have time after the trade review. I feel stuck with 20k amount of shares. So are you working on sizing up with this setup, or your with this setup, the parabolic? I always have fixed dollar loss. I'm not getting like so heavy or so small in some trades. It's always fixed size, depending on where my stop loss is. I might be R positive, but with slippage, I'm negative. Slippage, are you getting, do you mean slippage because of your stops? You are getting bigger R losses? Can my entry signal on INTC extended from the 9 on the 5, a reversal candle on the 2-minute chart, and another reversal candle on the 1-minute chart? I didn't take it off the engulfing candle, I took it after this candle, which was after the engulfing. This was my signal. Once it did a new 1-minute low, I took it to the short side. So Radik, for that, you need to be careful where to put your stop losses, okay? If I put my stop loss exactly at the high of the day, and the stock gets above the high of the day, 95% of the time I will get slippage because it's breaking and stop losses are getting triggered. A lot of people will be getting stopped out, and that's why in this setup I'm not getting the high of the week as my stop loss. I'm using somewhere in the range. It's the closest technical level within the range, and most of the time I don't get slippage. Okay, perfect, and you're welcome. So let's go through the trades, guys. There are a lot of trades in the off-topic chat. I'll be going through one trade for everyone. If we have time, we will go through the rest as we usually do. Let me get off those headphones and let's see what Ken did there. So Ken traded PTON and I see what he did there. So this was a new 2-minute high after a reversal candle and after a climactic volume. I'm not sure how the 1-minute chart looked like because this also plays an important role in my setups. But let's see what you did. PTON dropping down a lot. This is the 5th continuous red candle. So definitely looking for a reversal there. You're having a reversal candle on the 2-minute chart with an increasing volume. You see these guys? This is another good confirmation. It's giving you a new 2-minute high. A little bit of a late entry. I would have got in right when it broke above the body. I never use the wicks. Why don't I use the wicks? Because when I'm using the wicks, the risk to reward just gets messed up. If this is my risk, the reward to the 9 and the 5 will be barely 3 hours. If this is my risk, the reward to the 9 and the 5 will be somewhere around 5 to 6 hours, right? Now, let's see. It's going in your favor, really good, pulling back, and now it's coming back up. So yes, it looked like an M shape. I personally wouldn't bail on it because look at this. An M shape is not necessarily a reverse ABCD pattern. When is the M shape is actually a reversal pattern? Once it's breaking the low of the previous wave. So look, it's going up, pulling back, going up, and it could continue pulling back. And now it's doing an M shape, but you're not sure if it's going to break this wave right here or not. So once it's bouncing and it's coming back up, what's my stop loss? Original stop loss is here. Now my stop loss is the low of the previous wave. If it's breaking the previous wave, it means that the next pivot point it has is this point right here. So if it's breaking this level, most likely it's getting to your stop loss, and it will be a good idea to exit right there. But if it's not making that, then there is still no reason to exit. It could make a higher low wave and continue uptrending. Yeah, here it looks like a W for you, right? It also looks like an M right here, but we trade the waves. Always include the waves, not only the M or the W shapes. First wave, that's good. This was your stop loss. Now this could be your stop loss. If it's breaking it, you exit. If it's not, just continue on holding on to this one. The next thing I want you to pay attention to is this looked like an M shape in the 2-minute chart. But what do you have on the 5-minute chart? You have a new 5-minute high. You are having a reversal candle right here, and you don't have a new 5-minute low. So what's an M shape on the 2-minute chart in comparison to a double bottom on the 5-minute chart? What's stronger here, Ken? Definitely a double bottom on the 5-minute chart with no new 5-minute low is stronger than an M shape on the 2-minute chart, right? Your entry was good, the setup was good. Make sure to implement the waves in your trading, and hopefully you'll be stopped out less often. But yeah, this was really good. It ended up still to be profitable trade or break-even trade. You managed it well, so good job. Okay, where can I learn complete stock market trading for Indian stocks. Akash, unfortunately, we don't trade the local markets, Indian markets, British markets, or whatever. We're trading the US stock market, and I do recommend that you also trade the US stock market. Why is that? Because the US stock market is so liquid. There is a lot of volatility, and I live in Russia, but I don't trade the Russian market. I also trade the US stock market. I'm not saying that it's impossible, but I'm not sure how it's going to be traded at, so I can't really recommend where you can learn that. So yeah, good job, Ken. And let's go through the next trade. Yeah, exactly, Radek. So this was Bitang. And Bitang traded INO today. Let's see what you did, Bitang. And let's go through bigger time frames since we have bigger time frames here. The daily chart, INO gapped up slightly on the, still it's downtrending and still it's making lower highs on the daily chart. 15-minute chart, what was it doing? It was clearly downtrending on the 15-minute chart, lower lows and lower highs. 5-minute chart, downtrending on the 5-minute chart, reverse ABCD there, starting to form a second reverse ABCD pattern by this moment. 2-minute chart, you saw that it was holding this level, a lot of buying pressure wicks right there, and once it went above the non-moving average on the 2-minute chart below which it was holding, and once the moving averages started to cross at the breakout, you took it to the long side for a quick scalp play and it got you stopped out. So Bitang, if you are here, what was your original stop loss? I'm not sure if this was your original stop loss or you exited because it started doing something else. I like your exit. I'll tell you my opinion in this trade right now, and I would have exited break even here. But let's first see what was your original stop loss. Was it the new 1-minute low since the moment you entered it, or it was somewhere down there, but because it started going against you, exited earlier? And guys, what would have been your stop loss in this case? Let's say you got into the long side right here and it started going against you. Would you exit at break even? Yes, no, and why? I would have exited break even, and I'll let you know why I would do that. It's actually one reason for me. Bounce of the 50 SMA on the 1-minute chart. That's a good reason, but there is a stronger reason there. A hint, it's also a moving average. Reverse hammer, yes, the reverse hammer happened right after it closed, but there should be an earliest, yes, exactly, Lou, the 9 on the 5. So remember what we said, when a trend is clear, it usually drops down, pulls back to the 9 moving average in the 5-minute chart. It's getting down so far from the 9 on the 5, you either get in an entry down there with the hope it's getting back to the 9 moving average in the 5-minute chart and then continues the downtrend, or the first type of ABCD pattern, it goes sideways till the 9 moving average reaches it and then it continues the downtrend. Remember my main rule I told you, never go long against the 9 moving average in the 5-minute chart unless the 9 moving average in the 5-minute chart is your target, and never go to the short side when the stock is so far from the 9 moving average in the 5-minute chart, because stocks tend to go back to moving averages, right? So I'm never taking it to the short side here, here, or here, and I'm never taking it to the long side anywhere right there. So you taking it to the long side based on the bigger time frames, it's risky and it's so close to the 9 on the 5, and unless the 9 on the 5 is your target, or maybe you hope that it will break the 9 moving average in the 5-minute chart, you should also keep in mind that if it goes against you, you might want to exit at break even, because your signal on the 1-minute chart was good. You see clearly a lot of wicks down there. This is a strong indicator that it might actually pull back. It's breaking out. You're trying to get an early entry. I bet it broke up so fast, because of which you got a late entry. 2-minute chart, it broke the consolidation range right there and you took it to the long side, but then it's clearly making a reverse hammer. Okay, see, this is the reverse hammer you actually meant. I thought it was this reverse hammer, so thank you. First of all, bouncing of the 50 SMA, on the 1 minute chart. 2, reverse hammer on the 2 minute chart, right? 3, bouncing of the 9 moving average on the 5 minute chart. Enough reasons to exit actually at break even. Though this reason alone would have been enough for me, even if I don't have this and if I didn't have that one, based on my rules right there. It was a good try. It could have broke up, especially with an early entry. But based on the price action, we could always exit at break even. We don't always need to hold on to max loss per trade. So Lenny, let's see what you did. You traded INO, and I guess this was today because I saw this one. So INO going all the way up to the daily level, exactly to the daily level. People are getting stopped out on the daily level, or not getting stopped out, getting their partials, and maybe some shorts are trying to short it because this was a huge move on INO. A $2 move is too much, right? It's almost 10% of the stock's price. And if you get into the long side there, and by the way guys, I'm not sure if you saw that, I said that INO might actually squeeze to view up in the pre-market, and the reason for that was the 5 minute chart and the 15 minute chart. So many buying pressure down there, and not only this, it actually did. Let me actually open INO there just to show you why I liked it to the long side and why I called it to the long side when I was in the pre-market. I didn't take it because I'm focusing only on reversals right now, but look at the 5 minute chart guys. Strong move in the pre-market, did a parabolic reversal right there, and look at this 70% drop. What I love for an ABCD pattern. Buying pressures on the 5 minute chart, so many weeks on the 5 minute chart. 15 minute chart, look at these guys. Buying pressures as well, triple hammer right there. 30 minute chart, a doji right there. And along with that, on the level 2, I saw that there is a huge bid at $21. Huge bid, around 50,000 shares. And I knew that if it gets bought up and squeezes above it, most likely squeezing above you up, and that's what it did, right? Those shares get filled up, and then it's squeezing all the way up there. $2 move, which was a good move for INO. Now it's dropping down and it's forming an ABCD pattern on the 1 minute chart. This is ABCD pattern type 3. I don't definitely like it, and I wouldn't take it for an ABCD pattern. But if you combine two setups together, it's a 5 minute opinion range breakout with an ABCD pattern on the 1 minute chart, on a bullish pattern on the 5 minute chart. So a lot of buying pressure, and it's not making a new low. So this was a good entry, really tight stop loss, and good job taking partials all the way up, view up a little bit above it, closer to the daily level. I love that partial as well because it's not always making it exactly to the daily level. So start partialing earlier and exit the rest around view up. Really good job, Lenny, there. Now let's see Avi. Avi traded AMD. So let's see what you did on AMD, Avi. Now look at this, guys. Why wouldn't we take it to the long side there? Two reasons. I see Avi don't use moving averages there. Yeah. So there is another reason other than the moving averages for not taking this thing to the long side. I usually mention it in our trade reviews. So why wouldn't I, or why wouldn't you guys, if you wouldn't take it to the long side right here? Exactly, Lou. Yeah, even that too. Remember, usually I don't take the trade on a third consecutive candle. Why is that? Because most of the time after a third consecutive candle, stock starts doing a pullback. And you saw this is where actually Andrew took AMD to the short side. And I thought to myself, it's not my setup. I normally wouldn't take it where Andrew would take it to the short side. I need more confirmation. I need to at least see a reversal pattern, at least an engulfing, though I don't take it for an engulfings. I need to see something which is telling me that this short. But at the same time, I thought that, yeah, this is actually not a bad short. Why is that? It's 3 consecutive candles on the 5 minute chart, really wide barred candles. It never did a pullback, not even on the 1 minute chart. So it might actually work out, and it did work out, right? He took it to the short side, added to his short side, and then he took partials all the way down there. most of the time after 3 consecutive candles on the 5-minute chart. And remember, not always. You saw PTON, it was 5 consecutive candles, but most of the time after 3 consecutive candles, it's getting pulled back. 3 consecutive candles, it gets pulled back. And instead of trying to catch a stock to the long side on a 3rd or on a 4th consecutive candle, what do? I look for a parabolic reversal. I wait for a reversal candle. Perfect reversal candle. It couldn't get any more perfect than that, right? A shooting star at the high and a red shooting star and then a new 1-minute low. Take it to the short side, put your stop loss and go for the reversal instead of trying to get into the long side and get stopped out. Now what happened after that? It's pulling back. ABCD pattern. ABCD pattern in the 5-minute chart as well. New 1-minute high. There is a hammer down here. It's holding this level clearly. Let me get it to black. I think it's better to have it black. New 5-minute high. Take it to the long side. Stop loss somewhere down at the lows. And then took partials all the way up there. So this entry, it was perfect to the long side. And I'll show you what it looks like on the 5-minute chart, guys. AMD. You see this? Where did it bounce off, guys? Sometimes it's getting closer to the 9 and the 5. Sometimes it's touching the 9 and the 5. Sometimes it's wicking a little bit below the 9 and the 5. It's never clear, but this is the range where a parabolic reversal is going to. So instead of taking it to the long side right there, and you see that at 76.80, it was extended from the 9 moving average on the 5-minute chart. 3rd continuous candle, reversal candle, take it to the short side to the 9 on the 5. Closer to the 9 on the 5, stocks do what? They start forming an ABCD pattern, and that what also was on INO, or I'm not sure what stock was that, where our member got into the long side against the 9 on the 5, and that's why I don't like it, because on trending stocks, the 9 moving average usually is acting as a strong support, and you see it did the same thing here. Get extended from the 9 moving average on the 5-minute chart. I'm not sure if it gave us any reversal candle after that later. I think it didn't. Yeah, it didn't do that. Oh no, it actually did it on the 2-minute chart. And then it's pulling back to the 9 and the 5. Sometimes it's doing what? Wicking a little bit below the 9 and the 5. And then it continues the uptrend right there. So good job on that winner trade, Avi. Let's see what Ivan did. Yeah, exactly. So it's better to just try to take ABCD patterns closer to the 9 and the 5 and get to reversals when the stock is so far from the 9 and the 5. Hello, Jill. So let's see what Ivan did. He traded GM and it was so extended. How didn't I see that? Where did you get GM, by the way? GM was so extended from the 9 moving average in the 5-minute chart. Look at these guys. This thing is clearly bleeding. On these things, I love taking the first new 1-minute high. It's clearly downtrending, no new 1-minute high. And look at the volume, guys. Closer to the low of the day, the volume is getting climatic, right? It's so increasing and it's closing as a hammer at the low of the day. So he tried to take it for a parabolic reversal after the 1-minute hammer, took it to the long side, put stop loss at the middle of the wick, and Ivan, 100% I would have done the same thing you did right there, and I would have been stopped out right there. But I would have used the same stop loss right there, half of the wick, and unfortunately I'll get stopped out literally to the penny. I'm not sure what the 2-minute chart looked like, but anyway, once it's coming back up, this candle was red for a moment, right guys? You could see that. Let us zoom it in actually. This candle was red for a moment, and once this candle is going from red back to green, forming a new high, I would have tried to enter it on the same candle, put my stop loss somewhere down there. It would be somewhere around 20 cents stop loss. I'm not sure how much is that. Yeah, it would be somewhere around 20 cents stop loss, 15 to 20 cents stop loss, and go for a target of the 9 moving average in the 5-minute chart. Not necessarily the 9 moving average in the 5-minute chart. Get it closer to it, and look at these guys. You see, it looks like an M shape here. Still no new 5-minute low, so this is normal. Stock after a huge move, they do tend to make some sort of pullbacks. Now it's going up, dropping down. Look at these guys. It doesn't break the previous wave. If it's breaking this pivot point right here, if it's breaking this wave right here, most likely, not 100%, but most likely it could go to the previous low. So you could bail once it breaks the wave. If not, there is still no reason to bail on the trade. You could continue on holding on to it until it actually breaks the recent higher low wave. This was a really good trade, Ivan. Make sure to call it for me next time. Question: If you entered on candle 4, let's see this. Okay, this is it. Would you enter on a break above the candle 2 high, like with the first entry, or would you wait for a break above candle 3? Okay, exactly. So if I entered on this candle, which is candle 4, I would enter right above the high of this red candle and above the high of this previous candle. They're basically at the same high. I'm never using the wicks for my entries, and I'm never using the wicks for my exits. It's always the budgies. So if I'm entering on candle 4, and this is most probably what I would have done, I would have re-entered on candle 4. I would enter somewhere right here, and I would put my stop loss exactly where you marked right here. So Dardan, let's see what you did. If candle 4 was higher, would you still use that for the stop? Let's get back to this thing. If candle 4 was higher, what do you mean if it was higher? So candle 4, it doesn't matter to me how high it is. I would take my entry based on, I would take it on this candle exactly. I would take it once it breaks right here. I wouldn't have taken it on the 5th candle right there. Maybe I would have, but since it's like so far, even if I take it on this 5th candle where you have taken your entry, my stop loss is still would be the low of candle 4. That's why I prefer getting earlier entries. You see the difference? If I get in right where I want to get and where I usually get, this will be my stop loss. If I get in somewhere up there, this will be my stop loss. It's almost double. And the smart thing you did right there is that you entered on the pullback. You entered when this candle was red because you knew or you saw all the reasons which were telling you that this stock, or all the indicators which told you that this stock can actually be a reversal. Can you trade local market using that? I'm not sure, Jill, if you can or not. It depends on your broker. If your broker offers that, maybe you can, but I can't really give you a clear answer to that. I don't know, to be honest. I never traded local market, and I recommend you email support@destrader.com. Maybe they do offer it. I just don't want to say yes or no, and I might be wrong there. If I was so sure, Ivan, I would have taken it at the high of the candle 4, but still my stop loss would be the low of the candle 4. Now Dardan, let's see what you did. OSTK. This is exactly my trade, I think, right? Let's take a look at OSTK, because I also traded OSTK and it was a loser for me. Yeah, we both got into the same losing trade. Yeah, you actually took it a little bit earlier. You took it here. I didn't take it on this candle, OSTK. Why is that? Because of the bigger lower wick. I don't love getting against bigger lower wicks. I took it on this candle because here I had a bigger upper wick. You see? Still I got stopped out, you got stopped out, we both got stopped out, but I usually prefer waiting for confirmations. So you see OSTK going up, right? Getting extended from the 9-moving average and the 5-minute chart. Not so extended actually, but still it was far from the 9 and the 5. I think it was the third continuous 5-minute candle or fourth. You got into the short side on a new low. I usually don't do that because there was a bigger lower wick. I love getting down to the short side on a bigger upper wick, and then you got stopped out. Then you are trying to revenge trade it or to force it to the downside. I wouldn't do that normally. Sometimes I do, but that's only when I break my rules. But I don't do that because still, I missed my entry, I missed my risk to reward. And what's the technical stop loss here? The highs of the budgies, right? So the highs of the budgies would be my stop loss. And still I see lower wicks when it's going down on the 1-minute chart, and yeah, both of them are 1-minute chart. Anyway, on the 1-minute chart I see bigger lower wicks, so I just normally avoid it, and it actually gets back down to break even. It's fine. I mean, I took it on the right spot according to my rules, and I also got stopped out in this thing. Just the second trade, note, be careful when getting in against the wicks. It works sometimes, but it usually fails. You're welcome, and thank you, Jill. So AG, what did you do? Traded Apple. I see it was around 2 trades, I guess. And let's see what we had right there. Apple on the 5-minute chart forming sort of an ABCD pattern right there. I'm not sure about the previous price action, but it looks to me like it's forming an ABCD pattern because the slope of the moving averages are to the upside, so it must have uptrended before, pulled back and closed as a hammer on the 5-minute chart. Bigger lower wick, telling me that this pattern is bullish, right guys? On the 2-minute chart, or sorry, on the 1-minute chart, what do you see there? Same thing. Look at these guys. Bigger lower wick, bigger lower wick, bigger lower wick, breaking the consolidation area, new 1-minute high, which is the entry. My stop loss in this case would have been somewhere closer to this moving average right here, and then started taking partials all the way up. This ad, it was smart. And guys, can you tell me why I like this ad? Or why would you like this ad? There is one reason here. It's pretty clear if you look at the chart, and I think it's more clear on the 1-minute chart. Lots of supports. The daily level is a good support, but there is one better support. Moving average, it is, but there is something better than the 9 and the 5. A pivot point, yeah. Exactly, Gigi. The high of the day and the pivot point. So remember what we said usually? When the stock is breaking the high of the day, usually it pulls back to the previous resistance. And if the previous resistance ends up to be holding it, you could always add to your position. This is such a perfect ad and I love it. The best thing about this ad as well is that it was within the range of the second candle. Remember what we don't do? We don't go into the long side on a third consecutive candle. And when I mean a third consecutive candle, I mean at the break of the third consecutive candle, somewhere right here or somewhere at the top of the third consecutive candle. If the third consecutive candle is within the range of the second consecutive candle, 1, 2, it's still totally fine because it means that you entered somewhere within the second candle. The best entries you can get are in the first candle if you have a good signal. If you get in at the beginning of the second candle, it's still considered to be the first candle. If you are getting in somewhere in the middle, so if you entered somewhere here or somewhere here, which is here, it's still not bad. It's not perfect, but it's still not bad. I love your entry. It was a perfect entry for this setup. And then you are adding to your position. Look at this. Everything is there. Within the second candle, previous resistance acting as support, as close as possible to the support after you made sure that it actually was holding it, and then started parceling all the way up. Now this ad is what I would have avoided. And why is that? Because it's 1, 2, 3. 3 consecutive candles. This was already like the 4th consecutive candle, and most of the time, after 3 candles, what's happening, guys? A pullback to the 9-moving average on the 5-minute chart, and then a continuation for the trend. So this was perfect. I love it. This was perfect, amazing ad. So rare to find someone adding like that. It's a little bit tough to add on the way down, especially after breakouts when you tend to think that those are fake breakouts. But still, this was a good ad. This I would avoid because it actually did everything we said on those previous trades we reviewed, right? 1, 2, 3, pullback, right? Then it's doing a little bit of an uptrend and then a pullback, and that's it. Hey man, could you please tell me, if you don't mind, how can I link DAS platform with Interactive Brokers? Yes, Antonio, search on YouTube for this. Link DAS to Interactive Brokers. I typed it on YouTube. You will see a video, 2 minutes and 58 seconds, somewhere around that, and that's the video. It tells you what you need to do in steps. If you still couldn't figure it out, email me at ayman@beerbulltraders.com. I will send you that video and I will help you with that. You're welcome, AC. Lauren, let's see what you traded there. Yeah, I agree with you, Raju. So Lauren traded UPS. It started to go to off above VWAP and it held. Then you saw a VWAP false breakout form, entered once it crossed back above VWAP. So this was a VWAP play for you, right? I really prefer seeing also 5-minute chart. So guys, make sure to send 2 time frames at least. I mean, not for me, but for everyone. If you're trading only based on the 1-minute chart, it's totally fine. We'll review it based on the 1-minute chart. But if you trade both time frames, it's better for everyone to see the 2 time frames as well. Now let's see what he saw there. So it's making lower high waves, right? Coming back and consolidating around VWAP right there. So it broke VWAP, and Lauren thought that this break right here is a fake breakout. Why is it a fake breakout? Because it squeezed back above VWAP, and the entry was right when the candle closed around VWAP on a new 1-minute high. I love this. And along with the fake VWAP breakout, what we could see is that there is a daily level on around number 135, right? It's also making sort of higher low waves. It's also making sort of an ascending triangle below VWAP. So this is what I would love to call a 10-minute open range breakout with a small pattern on the 1-minute chart. You are taking it to the long side on a new 1-minute high, and then you are starting to take partials. What would be my stop loss in this case? Somewhere around here. This would have been my stop loss, or I could in this case actually include the wicks. But yeah, this was a really good one. You use the 1, 2, 5, sometimes 15-minute chart. Yeah, I do also recommend using at least the 1 and the 5, because it's better to see a setup on the 5-minute chart and go for entries based on the 1-minute chart. Going for a setup and an entry based on the 1-minute chart could be a little bit choppy, because a pullback on the 1-minute chart could scare you out. But when you see that this pullback on the 1-minute chart is actually still not forming a new low on the 5-minute chart, it will give you confidence to hold on to your trade. ADG, let's see what you did there. And then we have Daniel. So AG, a reason I stopped out on AMD is that candle closed below VWAP. Any advice on how to avoid it? So let's see what you saw in AMD. AMD, we see a pre-market pivot points right there. We see this point right here. We see somewhere a point right there. And we have a pivot point down here. On the 5-minute chart, it's breaking the high of this pivot point, right? I like this. And this is a really good entry to take it to the long side. Now let's see what you've done. Taking it to the long side on the 1-minute chart. See guys, a clear breakout on the 5-minute chart with a confirmation candle on the 1-minute chart, a hammer. This is what I love to do. I love seeing confirmation candles on smaller time frames before I take a trade. If this new 1-minute high happened to be after, let's remove this week, after an upper week, 100%, I wouldn't take it to the long side. Upper week is just getting pushed back down every time. And because it's getting pushed back down every time, I would be afraid that it will go a little bit to the upside and form another wick, and then on the next candle it will get me stopped out. Seeing that the candle is giving you a confirmation, along with the confirmation you're having on a bigger time frame, this was a perfect entry. You take it to the long side, partial closer to the up there, and you got stopped out because of this reverse hammer on the 1-minute chart. And this is what I told you guys, like in the previous trade. When you are trading off the 1-minute chart, the waves and the new lows could get you scared out. But if you pay attention to the bigger time frames, and you see that on the bigger time frame it's still not making a new 1-minute low, or sorry, new 5-minute low, you will be more confident holding on to your trade, right? Here it didn't make a new 5-minute low. Here, yes, it was scary on the 1-minute chart. It looks like it engulfed on the 5-minute chart. But when I see this and I don't have this candle yet, I tell myself two things. It's either making a new 5-minute low, and if it's making a new 5-minute low, what's this setup called, guys? Green, red, and then a new 5-minute low. What is this setup? Yeah, the waves in the 1-minute chart make it seem like moves are bigger than they actually are. Yeah, that's true, Lauren. So these guys right here is an engulfing crack setup. When you're having a green candle, then you're having a red candle. Like right here, you still don't know what's going to be. It could be a long setup and it could be a short setup. Why is that? Because this point right here is the beginning of two setups formation. If it's making a new low and it's breaking the low of them, it's an engulfing crack. If it doesn't make a new 5-minute low and then it gets pushed back up and engulfs it, this is a bearish engulfing sandwich. Why a bearish engulfing sandwich? Because this candle in the middle, it got, which is a bearish candle, got engulfed by two bullish candles. And the new high is the breakout to the long side. So yes, it was scary on the 1 minute chart, but pay attention to the 5 minute chart. On the 5 minute chart, it almost engulfed it, and it could be two things. No reason to exit because there is no new 5 minute low, and as long as there is no new 5 minute low, the setup is still valid. If it breaks or makes a new low and you exit, that's smart because it starts making a setup against you. If it engulfs, it's perfect. No reason even to exit at the high of the day because this is a breakout setup, a bullish breakout step, after which you can hold on for a breakout or for a bigger run right there. So this is how you will be able to avoid it. Yeah, exactly, Balan ADG. Good job. Where would you take profit if you kept the trade? So let's take a look at AMD. AMD is at all-time high, guys, right? I'm not sure if it was at all-time high. I think at this moment it wasn't at all-time high. I usually take profits at daily levels, okay, or at rewards. Where would I take profit? If I am so patient and I'm so good following my rules, I'll pay attention to the 1 minute chart. Sorry, where is the 1 minute chart on AMD? I'll pay attention to the 1 minute chart. And as long as it's making higher highs and higher lows on the 1 minute chart, I'll keep holding on to it. Once I see a reversal candle and a new 1 minute low, I'll take a partial. Not exit, take a partial. Because still there is no reason to exit. Why is that? Because it's only made 2 consecutive candles. 2 consecutive candles, most of the time it makes a third consecutive candle. But since it did a reversal candle on a second reversal candle on the 1 minute chart on a second consecutive 5 minute chart, I would take a partial at a new low. Now look at this. It's making a third consecutive candle on the 5 minute chart. It's giving you a reversal pattern, and this is how you implement this. If you don't trade those parabolic reversals, which I trade, you can implement them at least to know where you need to take the biggest partial out. So it's the third consecutive candle on the 5 minute chart, right? It's extended from the 9 and the 5, a reversal candle, new 1 minute low, and most of the time after that happens, stock is pulling back all the way to the 9 and the 5. And it could be closer to the 9 and the 5, it could touch it, it could wick above it, and sometimes it could even continue the downtrend. And if you are long in this thing, you don't want to try or to test your luck here. You don't want to give all this room back down there, or all this profit back down, hoping that it will bounce off the 9 and continue the uptrend. In this case, it did it. Sometimes it doesn't do it. It just continues the drop back down. Because of that, take most of your position out, 70 or 80%, and then test your luck. If it's holding in it and it's giving you a trend continuation pattern, you can always add to your position as close as possible to the support. If not, you're already out most of your position and you could exit the rest at break even if it's going back down to break even. Or you could exit on a pattern. What pattern? Look at this, it's going up, pulling back, trying to come back up, getting pushed back down on the 5 minute chart. You're having a double top with the second top lower than the first one, making a new 5 minute low, reversal pattern. No need to hold on all the way to break even, just bail somewhere down there. So exit either if it's giving you a good signal to exit, or exit if it's starting to form a setup against you. You're welcome, Abil. And you're welcome, Antoniaso or Adrian. Now Daniel, let's see what you did here. Daniel traded shop, and this was before yesterday. Yeah, it was before yesterday. So let's see what shop did. The pre-market, it held above view up, which is a good indicator that it might be a long. On the daily chart, it also gapped up, another indicator that this thing might be a long. On the 1 minute chart, on the 5 minute chart, it's dropping down after a double top, right? Reversal candle below a daily level, and then it's dropping down. Not a really good sign, but still doesn't tell you anything. Could go either way, right? Now look at this. I bet you wanted to get into the long side because of how bullish it was in the pre-market and how bullish it was on the daily chart. On the 15 minute chart, it's a new 15-minute low, which is a weak sign right there. On the 5-minute chart, I know why you took it to the long side. It did a doji, and it did a new 5-minute high, right? But look, moving average is almost crossed, not crossed yet. And the 2-minute chart, you are having candles forming against you. Yes, this is a doji in your favor, but this is an indecision candle still after the reverse hammer and after a doji on the 2-minute chart with lower lows and lower highs. On the 1-minute chart, not bad. Buying pressure, indecision candle, new 1-minute high, still below most of the moving averages. So you could trade it here either way, but looking at all the signals that you have, new 15-minute low, this is not a bullish sign, this is only a bearish sign, right? Moving average cross, which is a reversal indicator. It was uptrending, now it's dropping down. Moving average cross, stocks usually pull back to the cross before the continuation to the downtrend. Two signals that this thing is still weak. 5-minute chart, bounce off a daily level, lower lows and lower highs. 3 signals that this is a reversal. You could say that this is an indecision candle, so it could be also a long. Let's say we also have one signal that this might be actually a long. Gap up, good thing, this is a long, right? So 2, 4, 3. 1-minute chart, it's making lower high waves. Lower high wave, lower high wave, lower high wave. First higher low wave, starting to form a pennant, right? So the setup is not ready, it could break up. Either way, let's say that this is not long, not short, it's totally fine. But again, it's still below all of the moving averages. So you're having 2 for bullish, 4 for bearish. I would either avoid this trade or would start to look in for a short setup on it. And I think I wouldn't have tried it to the short as well, because there is a lot of support down there, unless I'm getting in somewhere down there with a tight stop loss just to have an early partial right there. So Matthew, let's say what you did on PayPal. So you try to take into the long side. Now this thing I would have avoided. Look at this move. It's $10 move on a $200 stock, right? It's 5% move. 5% is too much, right? I mean, if you make 1% or 2% per day, that's good. But if it's making a 5% move, whoever took it to the long side after this hammer already did around 4 hours trade right there, or 4 hours move. And it's getting into daily level. I know that you try to get into the long side here because you have a daily level on the way, and those daily levels, they are acting as magnets, and smart traders who are getting in earlier, they are trying to hold on to the daily levels before they are starting to take partials. But remember, stocks not always hitting those daily levels. It could get closer to it, it could touch it, and it could go a little bit above it, similar to the moving averages. In this case, it did touch it and you took a partial right there, which was smart, but the risk to reward wasn't there. Good that you didn't actually be so greedy and hold it for a loss. And this trade was actually smart. This I like it. You have daily level on the way, you have a red candle, and then you're having a new 1-minute low. I would avoid it because this is not the pattern which I usually take for a parabolic reversal, but still, it's not bad. And I would definitely prefer it to the short side more than to the long side, because it already did a huge move. And the pullback now is to be expected. So you take it to the short side, put your stop loss somewhere above there. I would actually use the high of this. Maybe I would use this actually, yeah. It's safer to have it here. This is too much. You could use this here. And then starting to take partials all the way down. So yeah, the short was definitely smart. I like it. And it wasn't actually a pullback. It ended up being a reversal. So good job on this thing. So yeah guys, we actually have 5 more minutes. So I think I wouldn't go through all of the second trades we have here, because I'll not be able to go through the second trade for everyone who shared their trades. If you guys have any questions, we still have 5 minutes. I could answer them. If there is anything you want me to look at on the charts or any trade you are in, I could also do that. Let's take a quick peek at the market. OSTK. What's AMD doing? Ended up dropping down. INTC. Yeah, not much there. Let's quickly go through the watch list there. KNDI ended up dropping. Home, BLNK. This is my watch list, so I'll go just through that quickly if there is anything interesting. Not really interesting, and not an ABCD pattern, by the way, guys. Fake breakout, got back down into the range. Remember that an uptrend is good as long as the previous resistance is acting as support. So up to this moment, this was a good uptrend and this was a good place to add. Now that it broke the previous resistance and got back into the range, this is a weak pattern. This is no more healthy uptrend, and it could do anything. Yes, it could continue the uptrend, but it could just now form a head and shoulders and drop down. So I would definitely not take it for a trend continuation if it makes a new 5-minute high. And I have INO. INO is kind of clear. I like it. NIO, not so much. So Ken, would you avoid trading stocks with huge spread? It depends, Ken. OSTK, for example, it had 20-cent spread when I took it today to the short side, if I'm not wrong. Yeah, it had around 20-cent spread. But look at OSTK. It's moving $7 in one move. It could pull back around, I don't know, $5. What was that pullback? $3, $4, $5. If I have 20-cent spread and I have 30-cent stop loss, it's 50 cents, and it makes $3 move, I'll be up 6 hours, right? So it depends on the stock. Still, I don't like high spread stocks. You are down too much when you are getting into them. I prefer getting in stocks which have maximum 5-cent spread. QCOM being extended. Let's take a look at QCOM, guys. So yeah, this is nice. We're having a reversal candle at the high of the day, right? If this candle goes from white to red and makes a new low, it will be decent to take it to the short side. This is already like too much right there, right? With no pullbacks. Too much on the 2-minute chart with no pullbacks. So actually, yeah, this is actually nice. I'm not going to trade. I'm done for the day. But so let's take a look at what it's going to do. We have around 3 minutes, so let's see what it's going to do there. Adrian, it's good to trade of the 2-minute chart and the 5-minute chart if you're a scalper, but make sure when you're trading smaller time frames that the bigger time frames are also in your favor. You can get out fast at 1 hour, 2 hours, but make sure that your win rate is huge if you are going for 1 hour, right? Even if I trade with the smaller time frames, I prefer waiting for a bigger move. So yeah, this is actually interesting, but it didn't make it. You see, we had the reversal candle, but the reversal candle alone, when the stock is extended, is not enough. You need a new 1-minute low. Now look at this. What if it makes an engulfing right here? Would you guys take it to the short side? I mean those, whoever trading this setup. I personally wouldn't take it to the short side if it makes an engulfing here, because what I noticed for a lot, it makes an engulfing, next candle drops to the 9 and the 5, and then it's getting me stopped out. That's why I hate engulfings. It just bounces off the 9 and the 5. I need to see a reversal candle on smaller time frame, and then I get to my entry. So yeah, let's continue watching it. I think it will give a good setup or a good reversal if it's giving us the confirmation. So in this case, I don't like it so much. I wanted to make a little bit of a move to the upside and then go from green to red. This is what I love the most. Now, yeah, like this was decent. If it goes to 106.95, that would be my entry. 106.95. Because I wouldn't wait for 106.93 or 94, because once it breaks down, usually they dump and I get some slippage, and I wouldn't pre-enter. So see, another reversal candle, but no need to pre-enter. You try to base your entry on the 1-minute chart. Yeah, let's continue watching it. And the more extended it gets, the better it is, because the more violent the pullback will be. Whoever got into the long side there and whoever is so good at holding their trades, they'll be looking for that signal where it might drop. And once a big player starts taking partials and once it's making new lows, other longs will start taking partials, and a lot of shorts will be getting into this position because they know that this is the moment where it might be pulling back. Sometimes it's not giving you that signal. It could just go now and drop all the way to the 9 and the 5 or closer to the 9 and the 5 or 106.50, 106.75. If it does that and then continues the uptrend, I will avoid it because the move is gone and it didn't give me the signal, which is totally fine. That happens as well, right? You wait for your setup, for your perfect setup. If it's giving you that setup, you get in. If it goes without you, without giving you the signal, just let it go without you. This is an engulfing. I don't go after engulfing setups. Might work out without me and I might miss the trade, but I don't want to go down or to the short side with 30-cent stop loss when I will have only 2.5 hours left to the 9 moving average in the 5-minute chart. This is so much. And not so much, this is so little actually. Let's quickly take a look at Apple and get back to QCOM. Yeah, Apple is like 1, 2, 3, definitely not taking it to the short side. Need a pullback before a trend continuation to the downside. This is what I'm telling you. When it makes an engulfing and then a new 1 minute low, I usually avoid it because a lot of times it bounces off the 9 on the 1 minute chart and is getting me stopped out. This is why I hate engulfings. I love reversal candles and new lows, but not engulfings. Okay, if there is an upper wick after an engulfing, it will look better, definitely. So let's say this candle is going up and then it pushes back down and closes as a reverse hammer and then makes a new low. This is decent. This is not bad. Depending on how huge the wick is, because your stop loss will be the wick of that previous candle. So if this wick closes somewhere around here and then it gets pushed back down and closes as a reverse hammer, preferably a red reverse hammer, and then you take it on a new short, your stop loss will be 20 cents at least. 20 cents isn't bad because you'll have at least 4 hours to the 9 moving average on the 5-minute chart. Now this is not a good candle. I don't really love it. Yes, it's sort of a doji, but it's a wide doji. It could work out, could not. It's definitely better than engulfing if it goes below 106.80. Remember, not in this case I'm including the wick. I'm not going for the body. If it goes below 106.80, I would put my stop loss at 106.98, 97, somewhere around there, and then go for the 9 and the 5. It's not a perfect stop. It might fail. But you see this? In this case, the wick needed to be included. That's why I needed to go below 106.80. Because I see this happening a lot. The 9 moving average in the 1 minute chart, similar to the 9 moving average on the 5 minute chart. It could touch it and then bounce. It could get closer to it. And it could just wick below it and then squeeze back up. And then get me stopped out. Did you ever consider adding Bollinger Bands for reversal? I added them. It was too much information. I didn't like that, to be honest. It got me stopped out a lot. Because a lot of times those reversal patterns happened or occurred even within the Bollinger Bands. So let's take a look at this. This I like. This I like. This is decent. Let's see that. Again, not a perfect setup. Why is it not a perfect setup? Because for a perfect setup, I want to see the reversal candle on the top and then take it to the short side. A lot of times I get stopped out somewhere right there. It makes a lower high and then drops down. But this is decent. It's not the worst setup if you take it. Right when it did the 80, stop loss at 99 as we said, right? Around 18 cents stop loss. This is 1 R right here. Unfortunately, the 9 and the 5 got closer, so I will need to take partial at 30, 35 or 40. Because it's not always getting to the 9 and the 5. And remember what we said on our success webinar about the reversals. When the 5 minute is within the 5 minute, you also might want to take partials closer to the 5 minute chart. Why is that? Because sometimes it's not making a new 5 minute low. It could be a beginning of formation of the bullish engulfing, a bearish engulfing sandwich. If it breaks the new the 5 minute candle, then you might want to hold it for a bigger run. I definitely wouldn't partial here. If I took it to the short there, because this is only 1 hour, it's literally not worth it. I would just continue holding it at least for 2 hours, because the 9 moving average is just getting closer and closer. We're actually over time, but it's fine. Let's see what this thing is doing. Yeah, Peter B, exactly. 106.25. It's a little. I would go for 30, to be honest. I wouldn't go for 25. But it needs to make a new 1 minute low. Now this is normal. If it makes it even to 106.80 or 85, it's totally fine. Don't worry about this candle. Yes, it's a white candle. Yes, it might go all the way to 106.80, but it's nothing to get you scared out. It will break. And it's breaking. Let's see where it goes now. I see that. What's 3-bar play, guys? 1, 2, 3. 3-bar play. Short, stop loss. You took the previous one, right? This 3-bar play, Peter? Short, stop loss, right? Okay, that's also 3-bar play. So let's keep an eye on it, guys. More than 3 bars, do not expect 5-hour profit. I agree with you, Peter. It's just the 9 is getting closer. The stock is so strong, right? We're not getting here for a full reversal. We're going just for the pullback. When the stock is so extended from the 9 and the 5, it tends to make pullbacks, right? Let's keep an eye on it. Still nothing to be scared out here. I personally wouldn't like it if it goes above 106.80. Still might work out, but the entry here is late, right? That's why I love having entries closer to the resistance on reversal candles. If they don't give it to me, and I still believe that it's weak, I will get in after the next confirmation once it makes new low around 106.80 for a trend. But I will hold it. 1 minute high will not scare me out. I will just bail on my original stop loss. And I know that the original stop loss, not the original stop loss, I will exit at break even. And I know that exiting at break even is bad. Better sticking out to your stop loss, because most of the time it could just make it double top with the second top lower than the first one. But I see here that it got so close to the 9 on the 5-minute chart. So sometimes it will not just reach it, right? And if it continues the uptrend or continues coming back up, this is the 5-minute chart, new 5-minute high, and then it will just shoot back up. In this case, I'm using break even as my stop for now. If it makes a new 1-minute high, no reason to exit. Just be patient. If it didn't give you the 2 hours, just hold on. You don't want to exit for small losers. Either hold it to a break even, because a lot of times it will work out for 2 hours and even more. This candle is good, but now it needs to break this area right here. If it's breaking, it will dump. It will flush at least a little bit with the volume. This candle is good, but it needs to make a new 1-minute low. If it's not making it, it will struggle a little bit, but it looks good. This is definitely not a candle we would want to be against. Small pivot point here, not so strong, and it's also a round number, so it's breaking it. It might flash down. On the level 2, there is nothing on the bid. You see these guys? I told you it's going to flash down once it breaks this point right here. That's how we implement the candles for confirmation. And now around here, you already get a 2R, right? If you get around an 80 with 18 cents stop loss, you're already getting a 2R. Quick partial, because it's as close already to the 9-moving average in the 2-minute chart. Breaking down, take the partial, and go back there. So yeah, that's it, guys. Whoever is in this trade, good job for you. Continue holding on to it, nothing to be scared of. Make sure to take partials. Unfortunately, we are way over time, but this was actually an interesting thing to watch and comment right here. Have a good day, everyone. I will be in the chat room. Guys, on YouTube, if you still have any questions, email me at ayman@bearbultraders.com. And yeah, have a good day, everyone. Bye-bye.